Good morning. Today we're going to talk about the UK labour market, wages, and what this means for future interest rates. At the start of this month, we saw the Bank of England lower interest rates for the first time since 2020. So interest rates fell from 5.25% down to 5%. And that's important for households and corporates that have loans, and when thinking about the cost of financing. The question is now whether and to what extent the Bank of England will reduce interest rates in the future. Now, we've had data this morning which will help in that decision making with wage growth data and data on the labour markets. So if we start with the labour markets, if we think about the unemployment rate, that's been trending higher gradually since December, where it reached historic lows. And that suggests that the amount of labour supply is outstripping demand. However, data this morning showed a reverse in that trend, with unemployment falling by 0.2% to 4.2% in the 3 months to the end of June. When we look at the individual details, however, it showed that the number of workers working part-time actually increased by 145,000, whereas those in full-time work, that actually fell by 47,000. So a key trend there, more workers going into part-time and less into full-time. Also worth noting is the number of people claiming unemployment benefits ticked higher, now standing at 1.8 million. However, the Office for National Statistics that provides this data did say that you should treat the data with some caution due to small sampling sizes, and it's due to revisions in the future. Also, when we look at UK wage data, there's some encouraging progress. Unlike the US and Europe, UK wages has remained elevated, a little bit more sticky on a relative perspective in recent months, which is more problematic for the Bank of England when thinking about the direction of inflation. But the data this morning showed that, excluding bonuses, wages fell from 5.7% to 5.4% as expected. When you include bonuses, wages fell more. They fell from 5.7% to 4.5%. So this was below the consensus estimates, which is slightly more encouraging. But when we look at the data and drill into the details, we see a stronger fall in public sector wages. So they fell from 6.4% to 1.9%, and this was due to the large one-off bonuses to the NHS rolling out of the calculation, which they saw last year. When we look at private sector wage growth, that remains sticky at 5.1%, which suggests that the Bank of England may be a little bit more patient in future interest rate cuts. Somewhat encouraging is when we look at services wage increases, which has been quite strong in recent months. That has started to fall. So that's dropped from 5.7 to 4.3%, its lowest level since October and well below the average that we've seen this year. So the data this morning suggests that the Bank of England is unlikely to speed up the pace of interest rate cuts at the minute. However, if we see further progresses on the wage front, if this trend of wages slowing at a faster pace than initially thought continues, and we see further progress on services inflation, then it suggests that interest rate cuts can come through in the coming months. If we look at what the markets are pricing, market's pricing a 0.4% interest rate cut by the end of this year. That's everything from us today. Thank you for watching, and we'll see you tomorrow.